Welcome to Ask the Lawyer radio podcast with attorney Brian Figeroux of the law firm Figeroux Associates. This podcast features a recording of our most recent radio show aired weekly in New York City. We hope you enjoy the show, which features news, views, and interviews on matters such as immigration, personal injury, bankruptcy, divorce, family law, estate planning, wills and probate, deed transfers, civil rights, criminal defense, workers' compensation, and taxes, both individual and business. You can contact us at 855-768-8845 or visit us at www.askthelawyer.us. You have questions? We've got the answers.
What are the tax implications of selling a property in NYS? A step-by-step legal guide. Selling a property in New York State, whether it's a home, condo, co-op, or investment property, can be profitable. But before you celebrate your sale, it's crucial to understand the tax consequences involved. Many sellers are surprised by the amount owed in federal, state, and local taxes. At Figeroux Associates, we help clients navigate the complex tax landscape, avoid costly mistakes, and legally minimize their tax burden. This article outlines the step-by-step process of evaluating and managing the tax implications when selling real estate in New York State. Step 1. Determine capital gains tax liability. When you sell property for more than what you paid, including improvements, the difference is considered a capital gain. Capital gains equals selling price minus purchase price plus improvements plus selling costs. This gain is taxable by the IRS, Federal Capital Gains Tax, New York State, NYS Capital Gains Tax. The exact tax rate depends on your income level, filing status, and length of ownership. Step 2. Understand short-term versus long-term capital gains. Short-term capital gains, owned less than 1 year, taxed as ordinary income, rates up to 37% federally. Long-term capital gains, owned greater than 1 year, taxed at reduced federal rates, 0%, 15%, or 20%. NYS does not differentiate between short and long-term gains. It taxes capital gains as ordinary income at rates up to 10.9%. Step 3. Take advantage of the primary residence exclusion. If the property you're selling is your primary residence, you may qualify for a capital gains exclusion. $250,000 for single filers. $500,000 for married couples filing jointly. To qualify, you must have owned the home for at least 2 years, have lived in the home as your primary residence for 2 of the past 5 years, not have claimed the exclusion in the past 2 years. We help clients assess eligibility and properly document their claim. Step 4. Account for transfer taxes. New York State transfer tax. 0.4% of the sale price, paid by the seller unless otherwise negotiated. New York City transfer tax, if applicable, 1% for properties under $500,000, 1.425% for properties $500,000 and above. NYC sellers often pay both state and city transfer taxes, significantly impacting closing proceeds. Our firm ensures accurate calculations and appropriate contract terms. Step 5. Understand the mansion tax. If you're selling property over $1 million, the buyer typically pays the mansion tax, but some deals involve seller contributions. Misunderstanding can lead to post-closing disputes. Our attorneys negotiate terms clearly in the contract of sale and ensure you're not unfairly burdened. Step 6. Consider depreciation recapture for investment properties. If you claimed depreciation deductions on rental or investment property, you may owe recapture tax upon sale. recaptured at a rate of 25% federal. Increases overall tax liability. We coordinate with accountants to help clients prepare for this additional tax and consider timing or 1031 exchange options. Step 7. Review 1031 exchange options. A 1031 exchange allows investment property sellers to defer capital gains taxes by reinvesting proceeds into a similar property. Requirements must be like-kind property. Proceeds must be held by a qualified intermediary. Replacement property must be identified within 45 days. Purchase must be completed within 180 days. At Figeroux Associates, we assist in structuring 1031 exchanges to meet IRS requirements and preserve your investment capital. Step 8. Non-resident withholding requirement. If you're a non-resident of NYS and selling property in the state, NY requires estimated income tax withholding of 10.9% of the gain, or the entire sale price if gain is unknown. This ensures NYS collects taxes even if the seller lives elsewhere. We assist in calculating estimated gains, filing Form IT-2663, claiming refunds if over withheld. Step 9. Filing obligations and documentation. Sellers must report real estate sales on IRS Form 8949 and Schedule D capital gains, NYS IT-2664 or IT-2663 withholding forms, transfer tax returns TP584 RP5217. We ensure all forms are properly filed and coordinate with CPAs when needed. Step 10. Strategic tax planning with legal counsel. We recommend early consultation to determine expected gain, evaluate exemptions or 1031 options, calculate transfer taxes, structure the sale to minimize tax liability. At Figeroux Associates, we partner with your financial advisors to create a tax-smart exit strategy. Conclusion. Selling real estate in New York can trigger a wide range of taxes, many of which catch sellers off guard. From capital gains and transfer taxes to depreciation and withholding rules, it's critical to understand every angle. With proper legal guidance from Figeroux Associates, you can sell with confidence, knowing your tax obligations are understood, minimized, and managed with precision. Planning to sell? Know your tax liability first. Schedule a consultation today. 26 Court Street, Suite 701, Brooklyn, New York, 11242. www.askthelawyer.us. 855768845. Text 718-986-4362.
Selling your home or investment property in New York? Don't let taxes take you by surprise. At Figeroux Associates, we guide you through the tax maze, capital gains, transfer taxes, depreciation, and more. Whether it's your primary residence or rental property, we help you understand your obligations, claim exemptions, and structure your sale to minimize what you owe. Before you close that deal, call 855-768-8845, text 718-986-4362. Visit askthelawyer.us. Figeroux Associates, smart legal guidance for every real estate transaction.